Morning, Steve here in Chicago with the morning grain comments. Well, the weather market continues, and you certainly have those who believe that we're going to get into a weather market and prices are going to go a lot higher, and those that don't. So it continues to offer some two-sided trade in the marketplace. Overnight beans up about 15 cents. We're at 11.23, which some people think is really a key technical area. If you trade above and close above that, we go to 12.49. So that's a real key technical area. In the corn, we're up about 8 cents at 3.78. In talking to farmers yesterday, talking to brokers, they look at this corn crop and they think the yield is better than 168. So they're willing to put sell orders in for cash equal to the futures at 383. Now, if we trade over 383, we go to 392 and then 401. So when you look at the two charts, beans look like they're trading the weather, whereas corn is kind of lagging a little bit, thinking that, you know, if this is just a 2 or 3 or 4 day thing, corn's not going to be hurt. It's interesting that probably the most bullish analyst out there has this ridge coming in July 20th, extending it to July 30th, and says that if the maps that he looks at are right, and this thing goes to August 10th, we can take 10% off the U.S. corn yields and soybean yields. So let's do the math. If we take the corn down 16 bushels per acre, that's 1.4 billion bushels of corn that we won't have that we think we have today. If we take 4.7 bushels off the beans, that's 390 million bushels that we would take off from the crop, and the USDA's carryout is 290. So you can see how important not only the duration of this heat weather issue is, but also the extent of the temperatures. We kind of go back to 2010, in which we saw a market that didn't really think it was that hot. Temperatures at night didn't get below 70 degrees, and we lost 10 bushels per acre from the August crop report to the November crop report. We went from about $3.90 corn to $6 corn, and we went to about $9 beans to $13.25 beans. So all those things would play out in your worst case scenario. Now, our weather guy put out this morning a special report saying to him the analog year is 1980, in which we had 1 week of heat and then it went away. So you have those opposing views. We also noted that the U.S. Senate is back talking about changing the $1 blender credit on vegetable oils used for biofuels to a producer credit. The difference is with the producer credit, you can't have imports from other countries. We got export sales today, 500,000 tons of wheat, somewhere around 500,000 tons of old crop corn and new crop, and 500 to 600,000 tons of old crop, new crop beans. Yesterday, probably the big thing in the cash market is you saw corn basis jump 10 cents around most of the Midwest. It feels like the farmer's not selling corn, and the end user is caught short and needs to buy corn, whether it's for ethanol, feed usage, or for the exports. Other than that, funds buyers of beans, meal, corn, sellers of oils yesterday continue to be adding to longs in corn and beans, and still a record short in the wheat market. So we have a weather market. They're volatile. They're hard to guess. It's Thursday. Make sure you know your risk and know what you're doing as far as putting trade positions on for customers. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.